How's it going, everyone? It's Sam. I am excited because we're going to talk about how I research stocks to outperform the index. So, I've had a lot of people ask me how I hear about a company really early on, or maybe how I'm able to get all my information and what I think about and how I find information on these different companies really early on. And I honestly wasn't going to maybe make this video quite this way, but I noticed on Personal Capital recently that you can compare yourself to the S&P 500. So I made my first deposit to buy an individual stock on March 5 because before that I had been only index fund investing. So I started to invest in individual stocks, and you can see here I started, and now I've outperformed the market by just over 20%. Now, this isn't necessarily even fully correct because this doesn't account for my WeBull portfolio, and I am up really big in my WeBull portfolio. But the thing is, for some reason, Personal Capital has a hard time connecting with a WeBull account, so I have to update that one manually. The other thing to consider too is that I still have about 40% index funds at this point. When I started this, though, I had 100% index funds, so I'm averaging 38% since March, but also a majority of that has been in index funds. So the return on individual stocks was actually much higher than 38%. But I realized the risk of doing that. Initially, I realized that the index funds provide greater diversity, but I haven't been able to get as high a return because of them. It's not included in this portfolio. So unfortunately, that's something that I have to deal with. But this is, again, something where I am beating the market by 20%. So I want to talk about how I do it. So if you guys like this, please leave a thumbs up. I really appreciate it. Please hit subscribe if you haven't already hit subscribe. We do videos every single day, and we've been right on a lot of stocks recently. A lot of stocks have been going up a lot. And if you want 4 free stocks through WeBull, I believe they are still running this through the time that you'll see this. I'm shooting this days beforehand, but if you use the link down below to WeBull, you can deposit $100 and get 4 free stocks, and it helps me out in the process, so I appreciate that. And if you want to know exactly when I'm buying and selling stocks, you can check out the link down below to Patreon. So let's take a look. Why would you even want to do this? Why would you want to invest in individual stocks when you can just invest in the index? A lot of people think that it provides a greater return. I've read a lot of studies, and that's why I was so against individual stock investing beforehand, that said that you can't beat the index fund. A lot of people try and they can't beat it. And it provides a lot less risk. It provides greater diversification among a lot of different stocks. Well, I think there are a couple different ways to approach this. First of all, these are just crazy times, right? I mean, with the pandemic, there were some companies that maybe were going to be good long term, and maybe you were like me and saw some companies going down way too much and thought, wow, this company's had a lot of growth. It's in the tech sector or whatever sector they're in. I don't think it's going to be that hard hit by the pandemic. I think it'll be fine. And then you invest some money in it. That's what I was thinking a lot with companies like Facebook, like Berkshire. Facebook, I think, will do well for a very long time. Berkshire is very conservative. I think that they would do fine. Now, again, you are taking on some more risk investing in an individual stock, but you also get greater returns. So that is one reason. Also, they always say past results aren't indicative of future returns. So just because index funds have done better in the past doesn't mean that they're necessarily always going to be this way. Also, I think a lot of the time it's our psychology that gets in the way, because if I were to show you the S&P 500, there are probably a significant amount of companies that you would point at and say, this probably won't go anywhere in the next 10 years. Or maybe it will go up 10, 20%. If you've been investing for a while, you can probably pick out those companies, dying sectors that are still included in the S&P 500. And maybe if you invest in individual stocks, you don't invest in those companies. That's why I've thought about some different sectors before. And I feel very strongly that you can outperform the market if you try. Now, it does take a lot extra time. It takes extra time to do research. It takes extra time to think about it, but some people just like that. Now, how great could the reward be? I want to just show you in this little slide here. If you invested $1,000 a month for 30 years, you would have about $2.06 million. Now, if you're able to get a 12% rate of return as opposed to a 10%, which a 10% is similar to an index fund, you would have about $3.05 million, about 1.5 times as much money. Now, this isn't even considering like a 30% return rate, which we're at 38% for the year. That's very difficult. But if you even put a 30% rate of return, it's 118 million after 30 years at $1,000 a month. So there are ways to make a lot more money. And if you get a couple percent extra return, this can compound like crazy and it can be very beneficial in the long term. So how do I do this? How do I actually get my info? How do I hear about companies early on? Well, I have a kind of a long list. I'm very lucky that I have a YouTube channel, so I can look in the comments, but you can do the same. You can take a look in my comments and see what people are posting on. And if I see a company enough and I haven't researched it, I usually pull it up. A lot of these people are, researching these companies and trying to be on the cutting edge. So you have to do your own due diligence, but you can hear about companies very early on in the comment section of YouTube videos. Also my Patreon. So in the description below, we have a Patreon link. Right now we're sitting at, I think, 875 Patreon members, and we've grown 100 just over the last day. So it might be a lot more than that by the time you see this. We might be over 1,000, but people in there are literally willing to pay to just be in that group to then have access to other investors, to myself, and try to get in on companies early on. I think I've heard about a ton of companies in there that have exploded, and that's one of my top sources for information. Now, the other thing that I look for are YouTubers, and I think a lot of people don't really understand how significant it is to watch other YouTubers and why it's so important. But think about the people that make a lot of money on investing in stocks, on a stock doing well, right? It's either people that have put in a lot of money, or maybe it's someone that has covered the stock and gets a lot of recognition for it. Now, I'll try to explain a little bit better here, but about a couple weeks ago, I picked out 5 or 6 stocks in a row that did anywhere between 5 and 86% the next day. A couple of them did 100% return in a few weeks, and we just exploded as a channel. So I picked 5 or 6 stocks that made people hundreds, thousands, tens of thousands, even hundreds of thousands of dollars. And it's a good feeling, but also the channel grew like crazy. I mean, I made money on the investing side, but what I made from the channel growing was much more significant. We pretty much doubled in a week, and the revenue essentially doubled too. So YouTubers get rewarded significantly for being correct on the stocks that they pick. Now, again, we can be wrong just like everyone else, but we're highly compensated for being correct on stocks, especially if you can take advantage of, showing that you've been right on stocks. YouTubers do quite well. So I usually pay attention if a YouTuber makes a video on a company that I've never heard about. I follow about 30 or 40 different finance YouTubers. So at first I might not watch the video depending on who it is or how busy I am. But if I start to see 1 or 2 other videos start to come up, or if they have a very strong stance and I respect whoever it is that made the video, then I'll usually watch it. Now, the next thing is I just Google search. Sometimes I look at like Motley Fool or Market Watch and just try to see companies that have gone up a lot. That I don't do as much anymore just because I have these other ways of getting info. And then ARK Invest, I take a look at what they're buying. I use lucidtracking.com. A lot of people ask me that, but you can see exactly what they bought. I do have a premium membership there. They're no affiliate so far on the channel, but I do have a premium membership just to see what ARK Invest is buying, to try to get in early on different stocks. And then WeBull. I talk about WeBull in every single video, I think, but I really, really like the news section and the comment section. People don't seem to quite grasp how important this is. WeBull pulls from all different articles on all different sites. Anything that mentions the company that you're looking at gets pulled up. So if you're wondering why a company's up 5% that day, or 10%, or 20%, you can go to the news section on that company and it will come up with all the little articles that say like why blank company is up today. And then maybe it's really early on, maybe there's like a 10% spike in just a minute or two, you can go to the comment section. And you have to be careful because these are just random people on the internet, just like me, but they're a little bit more anonymous than I am. But a lot of the time, you can kind of look through different people's opinions and see maybe they know why a company's pushing up, and maybe you can get in early. So again, if you want that link, if you want to get some free money and sign up for WeBull, you can check out the link below. But it all starts here. You have to hear about the companies before anything else, before you can research them. You need to hear about companies in a timely manner. The next thing you have to do is review the info. So a lot of the time, I'm not going to discuss exactly what I would look for in a company because that would take a long time, but I take a look at the stock price first. I want to look at the price action, whether it's been trading sideways for a month or two, or whether it's gone up 500%, maybe what the cost of the stock actually is. You can tell a lot about a company, or some about a company, just from the stock price. If it's a 1 cent stock, it's probably very risky. It's probably a small market cap stock. This isn't always the case, but generally that's the case. If it's a $100 stock, usually it's a little bit bigger company, or it could be a bigger company. So you can tell some different information about it from recent price movements, from the price overall. I take a look at the company website. I try to get a feel for what they actually do, what their value statement is, what their management team looks like, maybe some recent news. Now, then I go to the investor deck or presentation. Some companies don't have this, but a lot of the newer companies do. They try to break down what they do, why they do it better than other companies, what their annual growth rate is, what kind of cash they have. If you can't find this because maybe it's an older company, then you can just look at maybe their last quarter results, Q2, Q3, Q4, whatever results, and take a look at that. And then I might look up some of the recent news articles. So I just search up the company. I take a look at the articles that have come out recently. That gives me an idea for if there's any hype on the company, what's going on, whether there's any recent movement in the stock price and why that would be. So that is something that I do next. Then you have to decide whether you want to buy the company and how much. So after you evaluate that, again, I'm not going to break down exactly how I evaluate the company. I walk before I run, and by that I mean I usually invest a smaller amount and then I invest more over time. And the reason I do this is just because a lot of the time I'm catching these companies really early on, so I do want to do more research before I put a significant portion of my money in the stock. And this is good and bad for the fact that it allows you to do more research. I haven't really had any companies recently, I don't think maybe ever, where I put money in and then there's a big red flag and I wasn't able to sell out in time or anything like that. I think I did a portfolio review and actually every single stock that I have is up right now. But I usually invest a smaller amount and then I add to it over time. But this is risky for the fact that a lot of the time then the stock seems to go up significantly and then it's up 20 to 50% by the time I want to invest more money. But that is also something that prevents downside, right? There are always going to be companies that are interesting to invest in and I want to invest in. So it prevents some downside. It prevents some risk from occurring just for the fact that I'm not investing 5 to 10% of my portfolio right away. That is how I go through these companies. Let me know your thoughts below. Let me know what I should be doing or maybe what you didn't know about. I appreciate it. If you want to know exactly what I'm buying and what I'm selling, you can check out the link down below to Patreon. If you want to get those free stocks, you can definitely check out the link down below to WeBull. It does help out the channel, so I appreciate that. Also, please hit the like button. And if you want to get in on the action, if you want to see what I am investing in and you don't want to join Patreon, you can definitely subscribe to the channel if you haven't done that already. Thank you guys so much. I appreciate it. And if you want to see some other videos, I'll put them up on the end screen. Some really interesting companies that I've been buying this week. Thank you guys so much. I appreciate it, and I'll see you in these videos.